Thanks for tuning in and welcome to your Cairns Real Estate Market Update for the month of February. We'll touch on quite a few things today, including what stock levels have done in the region over the last few weeks, what the rental market has done, where that's trending at the moment, and what the end of the wet season means for the market moving forward, perhaps buyer activity as well as stock availability. We'll also touch on a few things nationally that have overarching implications for us all. Let's jump straight in. Since the last update, available stock levels in the Cairns region have hit a brand new record low of just 591 active listings. This is an incredible number because last year we were talking about record low levels in the mid 600s, and a couple of years ago when we dipped below 700, that was the lowest available stock levels in over 30 years. So it's quite a significant number. It means that there is, if we thought it was tight last year, it's even tighter now as we move into 2025. This is driving some very significant prices and of course significant buyer urgency as well. The rental market has received a dramatic correction and strengthening for investors and landlords, those that already own property and are leasing it out, with a 17% reduction in availability. This has happened in just a couple of weeks, practically overnight. Of course, the very first month of the year, January, is typically a slower time when availability comes up. Clearly, those tenants and prospective tenants have all come back and vacuumed up all of that available stock, and we're back down now into record low rental numbers. Of course, affordability is always going to be a ceiling, but it means if you are looking to invest, or perhaps you're looking to move out of your residence and lease it out, you are going to be greeted with very, very favourable terms and ideally multiple applications for that property. The wet season as well is also showing the signs of easing up, which is great, and I'm looking forward to my lawn finally drying out. With it, we're seeing the return of more and more buyer activity, which is fantastic. We're also starting to see more stock starting to get ready and come on, as some of those owners have waited for the wet season to come to an end so they can have favourable conditions for photo shoots and all of those kinds of things. What this means for us is the lack of stock will drive prices. The ending of the wet season will bring on a little bit more stock and options and availability. Essentially, it'll be business as usual with very strong favourable terms for sellers and prices moving forward. Also, some great news as well is that we are beginning to see the return of some developers, local developers as well, which is great, with Cairns developer Alaro Homes releasing a brand new luxury project named Beachy of just 33 lots available in Port Douglas. There are a few other projects in the pipeline as well, but we'll be watching that space with great interest, as that may well draw some international investment as well, which is terrific for our region in general. Everyone loves a good news story. Moving on nationally though, greeted with a collective sigh of relief, the RBA has of course announced a 0.25% reduction in interest rates. I'm sure we're all aware of that by now. This will likely increase things for the market moving forward. It means that those people that were struggling with their mortgages have got a little bit of an ease in sight, so that's great. Affordability is going to be less of an issue for those people, easing some of that mortgage burden. Of course, there's still a lot more reduction to go to make it as easy as possible. In addition to that, it also means that buyers have access to a little bit more funds as well. What I mean by this is that new modelling has suggested that for every 1% reduction in interest rates, median values could and are expected to rise by as much as 6.1% across the nation. This is a significant amount, especially considering the amount of growth that the housing market in Australia has seen over the last 4 to 5 years. Looking at mortgages, the number of new mortgage applications has risen over the last 3 months by 2.7%. This has been as buyers have expected interest rates to come to a close as they were gearing up for a purchase come to New Year. So we will expect a very strong quarter of 2025 as we move on forward. The number of new mortgage applications we just touched on, but reportedly rental prices have dipped in major cities while regional locations have held. This is likely due to affordability as well, remembering that cities will have higher than normal rents, and that affordability factor being a very, very important thing. And finally, the Liberal government have suggested that if re-elected, they will allow first-home buyers to dip into their super by up to $50,000 in order to help them purchase a property. What we tend to find is whenever the government do release some kind of incentive to help stimulate any kind of subset of the marketplace, the only people that really benefit from that are the people who are very first in on those incentives, I should say. What typically happens is once there's more funds available, the markets shift to gobble up those additional funds. Of course, this is just for new buyers, of course, but it will likely mean that we have further growth on the horizon. Of course, macroeconomic factors being the largest, strongest overarching factors. If anything negative financial happens, that will be a detriment to the property market. But for our outlook for 2025, we're looking very, very strong. The market in Cairns is up over the last 3 months, and I'm not seeing any signs that's going to slow us down anytime soon. So some good news, which we love. That's your market update for February. I hope there was something in there of interest to help you make the best decisions for you moving forward. If you have any questions or real estate needs, I'm Tim from Toomey Schreiber, your local apartment specialist, and we're always at your service. See you next month.